Cisco Stock, ticker symbol CSCO. This stock is up 15% year to date, which is quite similar to the SP 500. On the 16th of August, Cisco presented quarter results where they beat on EPS and revenue. Analysts think they will beat on their next target as well. People love Cisco stock because of the dividends, and I understand why, with dividend yield at 2.8% and 11 years of dividend increases. So could this be the perfect moment to buy Cisco stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I am an investor looking for great stocks at great prices. So what does Cisco do? Cisco Systems is the largest provider of networking equipment in the world and one of the largest software companies in the world as well. Its largest business are selling networking hardware and software and cybersecurity software like firewalls. When we dive in the most recent earnings report, we see that revenue was reported at 15.2 billion, up 16% year over year, which is quite impressive. EPS was reported at $1.14. Cash flow was reported at 6 billion, up 62% year over year, and Cisco returned 2.8 billion to stockholders. Cisco also committed to increasing annual share repurchases and growing dividend. In here we see that all the three geo segments were growing in both revenue and gross margin. So this looks really good to me. Americas is by far the biggest segment. In here we see the product category breakdown. Secure Agile Networks is by far the biggest segment and is up 33% year over year. All the other segments are lagging behind. And the collaboration segment is down 12% year over year. And here we see the income statement one more time with some more details. We see that operating income is growing quite well to 28%, which looks really good to me. Net income increased 41% and the EPS increased 43%. So I love to see these numbers. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into this video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Cisco is a 225 billion market cap company. PE ratio is at 17, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for Cisco stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 57 billion and in this graph we see that revenue went up in the long run. But it is kinda like a roller coaster, it is going up and down quite a bit. Over a longer period of time margins are kinda steady around 20%, and most recently we see that margins are increasing. EPS is growing nice and steady. To me this looks pretty good. Analysts expect mid-single digit growth in the EPS. This is looking pretty good to me. And for the revenue it is a pretty similar pattern, but with slightly lower numbers. It is expected to see low digit growth in the coming years, which of course makes a lot of sense since they are massive already. Return on assets is sitting at 15%, which is a great number. Return on equity looks really good at 30%, and the most important number, return on invested capital, is sitting at 17%, which is a great number. It is slightly lower versus the 5-year average, which doesn't concern me that much right now. Current ratio is at 1.39, which is looking pretty good. It is going down in the long run, which is not a bad thing. Right now Cisco has 8 billion in debt. And I prefer companies that can pay down at least a big chunk of their total debt with the total cash position. Cisco has 26 billion in total cash, so they can pay down all their debt and still have some money left. To me this looks really good. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, even at a steady and consistent pace. But most recently it is coming down just a bit, so keep an eye on that. Shares outstanding are decreasing, which is a good thing. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.83%, which is a great number. Annual payout is at $1.56 and payout ratio is at 39%. I prefer 50% or lower, so right now they have 61% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 4%, which is not the highest number to be honest, but they increased the dividends for 11 years in a row, which is kinda nice. And if you take a look at these numbers, the dividends paid since 2012, you see that Cisco is increasing the dividends quite slowly since 2019. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that over a longer period of time, payout ratio is always kinda steady between 40 and 48%, which is fine by me. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at historical growth numbers, which is very nice. Overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Cisco stock with the overall market, in this case the SP 500. Next to that I added one of their main competitors, which is Arista Networks. On the 5-year chart we see that Cisco was beaten by the SP 500 by quite a margin. In total, Cisco returned 39% including dividends, versus the S&P 500 sitting at 67%. Arista Networks had the highest return with 168%. On the 1-year chart, it looks pretty different, with the S&P 500 returning 4% including dividends, versus Cisco returning 15% including dividends. Arista had again the highest return here. On the 6-month chart it is a pretty similar story, with Arista Networks having the highest return while Cisco again beats the S&P 500. On the 1-month chart it is finally Cisco that beats all the others in this list. So bottom line, Cisco stock was beaten by both the S&P 500 and Arista Networks on the 5-year chart. But most recently it started to create some momentum. So could this be the perfect time to buy Cisco stock? Well, let's check the 3 price tags that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2, 3 and 4%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 22, 23 and 24%. And for the free cash flow margin I'm putting in 29, 31 and 33%. For the PE ratio and the price to free cash flow I'm putting in 16, 17 and 18. There is still some growth left, but they don't have a moat in my opinion. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Cisco stock is at $55. I hit analyze and we see a few green numbers. We have a low price target of $35 to $47, which is a big drop from the current stock price. We have a mid price target of $41 to $56, which is still a decent drop, and we have a high price target of $48 to $66. To me, the high price target is the most justified here, indicating that this stock is in the middle of this price target. My final conclusion on this stock is that I do like the business. They are a massive company that has been here for a while. It is still capable of growing and it has still some potential left. But you won't see double-digit growth in terms of revenue. The real value lies in buying back shares and paying dividends in my opinion. From a value point of view they are in the middle of this high price target. And with cases like this I tend to lean to the lower side of the price target. So for now I'm waiting for the stock price to come down again before buying this stock. In this way you have a better value in my opinion and also a higher dividend yield. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.